What's up, traders? Welcome back to another Liquid FX video. Here we got a very quick video on a SPY trade that was taken on Monday of this week, and we just held it through. And the reason for holding it through is very obvious. We have a structure that's pretty much bullish, right? And we've been bullish on the S&P 500 forever. We've seen price giving us higher highs and higher lows. This is how I've got my structure marked up on SPY or the S&P 500. So for those who want to quickly understand what this means, we have the structural annotations which represent highs and lows in the market, right? And we see continuous highs and lows forming in the market, right? Now we've seen price break the most recent structural high over here. And this gives rise to the reason we're looking for overall buys in this market following this overall trend over here. So we now go down to the 15 minute. The 15 minute can show us more or less the same thing. So if we go down to the 15-minute time frame over here, we see our structure, right? So we're dealing specifically in this range over here. We see this range in price over here. We're dealing from this low up to this high over here, right? So this low and this high is our points of interest, right? Our main structural highs and lows. So from here, what we do is we get our Fib tool or our Fibonacci tool or our premium and discount tool for simplicity, and we project it from the swing low up to the swing high, right? Draw the Fib tool from the swing low up to the swing high. Now, what do we see over here, right? Now, this is our NFP day, right? So this trade actually formed of NFP and it mitigated on Monday. So what we see over here is we see the IPTA. We see the IPTA giving its overall price delivery the way it does, the interbank price delivery algorithm, right? So IPTA, the interbank price delivery algorithm, starts off with a consolidation in price. So the consolidation is here, represented by the Asian range. This is the consolidation. This is the market consolidating orders. As we come into London, what we see is we see price sweep the Asian high, right? We see price aggressively sweeping up, taking out that Asian high liquidity over here, and that's what we see over here, right? So London is a form of manipulation, right? This is a manipulation in price, right? So we call this the London manipulation or manipulation phase one. The London manipulates buyers into the market. Now the reason for that is very simply put, it's the fact that the market wants to generate liquidity on the buy side, right? So what's going to happen is stop losses are going to be placed in this region over here. So we're going to have a lot of stop losses, and these stop losses equate to one thing, and that's money, right? There's going to be a lot of stop losses in this region, so there's money to target from this manipulation over here in price. So the London session generates liquidity by manipulating the Asian high upon the consolidation. Now, if you remember, NFP was incredibly bearish. Okay, we saw an incredibly bearish NFP, and this is what we saw over here. NFP was bearish. Now, of course, what NFP is going to do is it's going to entice those sellers, right? It's going to entice early sellers into the market, or sellers as a whole. Sellers enter here. Now, the point of that is to understand that yes, we have a lot of liquidity that's been stacked over here in this region, like we discussed. Here is a lot of liquidity. So when we look at it like that, now that we see NFP aggressively move down, the overall higher time frame narrative is bullish, right? So what do you think we're going to see now in the New York Open, which is at 9:30 Eastern or 2:30 UK time? What's price going to do in this region? Yes, it's going to break structure, right? So we understand it's going to break structure, sweeping this liquidity over here. But price is very clever. It's enticed early sellers before the move upwards, which we're looking to catch. It's enticed early sellers to get in this region. They're going to have their stop losses around this area, which generates and engineers a liquidity, which we use to our advantage. And here's how we do that. How do we know whether we should be buying or selling at this point after such an aggressive NFP? Well, we look for a change in market structure. We look for a shift in market structure, and we have that over here, right? So we see the London high get broken here with a body. So we see a very convincing break of structure in this region, right? So this is a break of structure or a shift in market structure, or very simply a break of structure, right? A boss. So now that we see that, we understand that we're looking to enter off. Where are we looking to enter off? A fair value gap in this region over here. So this fair value gap over here is what we use to enter off, right? So this is a fair value gap. Again, what makes a fair value gap, right? A fair value gap is an inefficiency in price. So for those who don't quite understand the fair value gap, we're going to go through that very quickly in this video. What you're going to have is you're going to have three candles over here. Three candles, right? 1, 2, and 3. Now, if we just make the candles all gray for purposes, just so we don't confuse anyone. We have 3 gray candles over here. Now we're looking for something very specific when it comes to an inefficiency or a void or a fair value gap, okay? So what we need to understand is we need to understand that each candle is going to have a wick. So the wicks here are in red. The wicks here are in red. And we need to understand that we have an inefficiency in price for this region. Now the reason for that is because we understand that the wicks here, this wick over here, so this first wick, and this second wick do not touch. This first wick and the second wick do not touch each other, right? This is what causes the inefficiency over here, the imbalance. And that's exactly what we have over here in price. Look at this wick, look at this wick. They don't touch, right? So we have a fair value gap over here, right? So this is the basics of a fair value gap, a bullish fair value gap, and we enter off a bullish fair value gap, and it's the fair value gap that gives us our order block. So now we have an order block over here, right? This now becomes our order block. This candle right here, or these wicks over here, these buy to sell wicks, it can either be the last up candle prior to the down move, so we can either have our order block being this candle, or if it's buy to sell wicks, I prefer just to use the entire wick over here, as you can see. So what we use is we have an order block over here, so this is our order block, or simply an OB for short. And an order block is one that breaks structure, is priced in the discount, which it is, and leaves a fair value gap in price. Right, so this is what we use to enter off, and our entry essentially respected this order block, and an entry was placed just above the order block over here, around about this region. Stop loss was placed below the low, comfortable stop loss. You don't want to be too greedy with the stop. And we had a fantastic 1 to 4 or 1 to 5 R trail. To use the wrong one there. We used bullish. We had our stop loss just below the low. And what we've seen over here is a fantastic 1 to 3, 1 to 2, or I believe it ran up to, I believe this trade ran up to a 1 to 3, I believe almost a 1 to 3 or 1 to 2.5, something like that. Great SPY trade, proof in the pudding, right? Profits posted on Twitter. So as you can see, this is a great S&P 500 trade that was held from Monday through to Tuesday. Take profit on Wednesday the 7th, right? So this is the patience of the market, right? Let's just quickly go through the patience of the market, right? So you want to understand that you don't want to exit here, right? Because we saw Tuesday gave us a pretty indecisive range, right? So you understand you don't want to exit here because we're in line with the higher time frame, right? Higher time frame backs us, right? Therefore, do not exit at this point. Do not exit. Yes, you can go break even. Yes, you can take partials, but do not exit the trade at this region. Wednesday gave us our follow through in the New York and pre-New York session, and now we've ended up hovering here on Thursday. So again, fantastic trade, managed correctly as well, as it was held throughout the entire week from Monday through to Tuesday, going into Wednesday. Okay, so this is a great way that you can trade SPY, and this can be applied to NASDAQ as well and the US 30 if you know what you're doing. But I suggest to stick to one market, master it, and get the best you can. So for those who like this video, give it a like, give it a thumbs up, and I look forward to seeing you in the next one.